Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this lesson I'm going to show you a compelling setup, but it's what the other concepts that make up our total approach added to the setup that made it a beautiful high probability setup. We are technical based traders. Everything starts with a compelling pattern. No setup, no trade. Then we overlay these other concepts that make up our total method. So where is this setup in relation to the trend? Multiple time frames, support or resistance? Is it showing relative strength or weakness to the sector in the broader markets? Volume and moving averages are secondary. What are the broader markets doing and internals? Once you have that, you just simply enter and manage in between per your trading plan. Trader psychology is always an overlaying component of trading. It's the beast in your head that you're fighting as opposed to the objective approach that we use. I'm going to show you a breakout on this particular pattern. The correct breakout, we throw in the two general categories. One is it's bullish consolidation at resistance. It's from a sideways trend and it's breaking out from a sideways to an uptrend with a price void. Every one of our patterns we use that term price void, meaning look to the left and there's insignificant resistance to enable it to move forward. Secondly, if it breaks out, you can buy a retracement and reversal on this prior resistance, which we call minor support. We never buy from the low of the trading range to the high of the trading range. That's a concept called greater than 100% retracement. The odds of a retracement are significantly higher. This is just the opposite. We want to trade the initial breakdown or a retracement and reversal at minor resistance. This is XLC. This is a trade that we gave to our ETF trader, which only trades ETFs. There's significant benefits of that than trading the individual stock. Yes, it's a collection of stocks, and we do a great job drilling down and finding individual ones, but the benefit is when we have a bullish bias on a sector that can severely outperform the broader markets, and you don't have the same gap risk as an individual stock. So we gave this continuation breakout on a daily, weekly. This is a daily chart. All of our charts are this simple and beautiful. Color-coded candlesticks, color-coded volume. We have the 20, 50, and 200 period moving average. We say we use them just to speed up the analysis. So this broke down, had a big rally to resistance. This is what we call a bullish wide range bar. We would never buy there though because it rallied from the bottom to the top. This is two bullish inside bars on the daily chart. It broke out and it's chopping around, which is why I have this blue square here. We entered on the breakout of this. Our ETF trader is meant for longer holding periods. I'm going to show you the weekly chart in a moment. So keep this in mind that we bought the breakout of this consolidation. Let's look at this weekly chart going back a couple of months. Nasty downtrend. This is what we call a 180 reversal. What's a 180 reversal? It's an ugly red bar followed by a complete beautiful green bar that negated the message of that. Do I buy here? The answer is no. There's no pattern. But it's something to take note of that it wouldn't go down any lower. It had a closing breakout here, pulled back, and retested this 180 reversal. So this multi-week consolidation is a beautiful bottoming pattern. Now XLC on the weekly rallied 100% to this prior major resistance. That, using retracement concepts, is bullish. The thought process, once you see this, is find me a bullish setup on a retracement lower. We have it here. This ugly red bar engulfing suggested lower prices. This is another 180 reversal, similar to this 180 reversal. But notice the difference of this 180 reversal is above the 20. I have a higher pivot high, higher pivot low, and I have a price void. Look to the left, there's insignificant resistance. So again, go back to here. We bought over here, as you can see, 57.14 on this particular day where the star is, and continuation breakout daily, weekly. We sold parts of it into strength, and depending on your trade methodology, you could trail half under a prior bar's low, half under a prior pivot low, as we say, provided it has room to run to its destination, which is resistance. Come check us out if you want to get trades like this, investing and trading in ETFs. They offer superior advantages over stocks. Go to mastertrader.com/ETF. As always, email Greg or me with any questions. Good trading, and we look forward to seeing you in the next trade review video.